Hey everybody, welcome to the show. Today we're going to talk about why I want to be in the highest tax bracket, I don't want to be able to itemize, and you might realize why you might want to pay some taxes in too. I'm Karen, I'm a CPA, entrepreneur with big ideas, and I'm the mom.
I'm Cadie. I'm a payroll specialist, business owner, and detail-oriented person that makes things happen, and I'm the daughter. Welcome to Cheers to Business. So really, this is your cookie.
It is. It tastes so good.
Your cup of tea. So I'm just going to let you rock and roll and take it.
Tax can be a tool. I know that sounds crazy. Nobody wants to pay tax. I don't want to pay tax. Nobody does. But I kind of like it when the firemen and the policemen show up. So it's about not paying more tax than you have to. But sometimes, think about it. Where do you want to be in 5 years? I'm asking the listeners. I'm asking you. I'm asking myself. I'm asking Johnny. Where do you want to be in 5 years?
All right. Well, currently we're leasing our office space. So one day it'd be cool to have our own space, purchase a building.
I did that. I built a 6,000 square foot building, but how did I get the bank to loan me the money to be able to do that? It's because I showed I could make money. I showed that I was profitable. I showed that my company had equity and worth. Now, that's the difference between a balance sheet and a profit and loss. A profit and loss shows what you've done over a short period of time. It's the bottom line. That's all anybody cares about is the bottom line. I don't want to pay any tax. Get that bottom line down. But if your balance sheet has worth and value, then people can rely on your company to be able to loan the money to be able to pay it back. But you cannot pay debt and you cannot look good to the banks unless you have income. And if you have income, then you're going to pay tax. So what we need to do now for Payroll Vault, if that's your goal, is we look at the life of the lease, decide if that's enough time to get you where you need to be.
5 years.
5 years. That's perfect. No, don't laugh. That's perfect. We have 5 years to get your balance sheet where the banks need it, because we know how much they're going to let you borrow based on your balance sheet. Why? Because we're controlling the balance sheet. So you get that balance sheet to the worth it needs to be, but spread it out over 5 years. You don't want to pay a lot of tax all in 1 year. So spread out, make that growth consistent where you can afford it to build it so they'll loan it to you so you can do it. All right, I know this is confusing because nobody wants to pay tax, but think about it. Nobody's going to loan money to you if you don't have anything, if you can't show that you can afford to pay the loan back. So you can't expand, you can't get that new piece of equipment, you can't build that building unless you can prove to other people, because the banks are going to look back 2 years. And the banks have gotten, it's the underwriters, but they've gotten so strict on who they'll loan money to. You've got to prove that you've got 5 fingers and 5 toes, basically, on each side, because they are not just going to take your word for it. Those days have long gone. So you have to make sure that you can prove on paper. So get you a timeline. You're not going to do it by tomorrow. You're not going to do it by next week, and you're not going to do it by 1 year. So if you have a plan, maybe start putting that cash in the bank like you're supposed to, that's a whole other conversation. But to get to where you want to be, make it over time, do it consistently, start showing a profit.
So what are small things that a business can do? You're saying do these things, but what is that?
That's a good question. Don't pay for everything out of your house, out of your business checking account. Put it on a budget. You pay for your cell phone. I get that. But, every single tank of gas, really you're doing personal stuff too. Make your books real. I couldn't say it any better than that. Make your books real.
So that one business credit card, purely just
business. Only show business. Because you're trying to tell somebody and convince them that you have a profitable business, but you're writing every damn thing you can off because you don't want to pay tax. It's going to bite you in the ass.
In a new business's defense, things are tough in the beginning. So you may have to whip in that personal credit card to accommodate.
I get it.
I don't want people to feel ashamed of if they've maybe been, divvying up the cost between the different credit cards or whatnot.
Well, then get your own personal credit card. Pay yourself a little bit. Not a whole lot because you're trying to build something here. But if you want your payday to be significant, then you got to be willing to sacrifice now to take a little payday to get to a bigger payday. And I've known it because I've eaten the Roman noodles. So it depends on what you want. Life's about choices. You can choose not to pay any tax because you're writing every damn thing off. Because you can do anything you want until you get caught. And that's with anything. So you keep doing like you're doing. And I got a perfect example, BP. The BP oil spill hit. Mm-hmm. So all of a sudden people were going and they wanted to prove to BP that they lost money because the oil spill happened, the deep horizon. Well, you had to have 5 years worth of tax returns and you had to show them how much that you actually lost. Well, if you're writing every damn thing in the world off on your tax return because you don't want to pay tax, that means you showed no income. So how can you prove that you lost money if you never made money? They're not going to give you anything. Why should they? You haven't proven that you could make money. The bank's the same way.
So even if you can't prove it on paper, they don't care.
They don't care. Nobody cares.
Similar to individuals who were paid under the table.
That's exactly
what I'm talking about. And then they go to buy a car and they have no proof of that income. So why should the bank finance your car if you're not making any money?
Would you or me loan anybody money if they could not pay me back?
If they could not prove that they could pay you back.
Right.
Show me the proof that you're making money so that I can get paid.
And that's how tax is a tool. Because if you make money and you're profitable, you're going to have income, which means you're going to have tax, which means you can finance something to expand to grow your business.
And the more money you're making,
the more tax you'll pay.
But the more financing you can get.
Expand, expand, expand. They say that tea is in the kettle. The tax is in it. Damn it.
T stands for tax.
Yeah, T stands for tax. Couldn't get it out right. But that's the proof. The tax that you pay is the proof that you made money and had equity in your company.
Cheers to tax.
I can't do that.
But you're preaching to pay tax.
I know, but it's not preaching, but it's for a reason. So here, cheers to growth and wealth.
And paying tax on that wealth because you're proving it. All right, so there's been a lot of talk about balance sheet. So, okay, I use QuickBooks. I open up my balance sheet.
What do you say?
Dot. Cool, there's a bunch of numbers.
All right. Because the first part is your assets. Okay, how much you got in the bank, what equipment you own, who owes you what. Then you go down to the liability section. That's money that you owe. And then you have the equity section, and that's your bucket of worth since the day you've been open. That's why the banks care about it so much. Because it's not just for 1 year. It's since you opened your doors. You made profit. You put money in. You took some home. You took it. It goes out of the bucket into your hands. And so how big is your bucket? Because that's the proof in the pudding, like the tea is in tax. Because what happens is if that company has no value, why should they loan you money?
So what does a healthy balance sheet look like?
It's liquid. That means that you have more current assets than you have current liabilities.
So current assets are greater than current liabilities.
Yes, because if it's not and the liabilities are higher, you owe more money than you got.
Right. Okay. Got it.
All right. Now, here's another little myth. People think when they pay debt, they get to deduct it, but you don't. Want to know why?
Why?
Let's say I loan you $10,000 and you go buy all this stuff with it that you need for your business and you write it off. Well, now you got to make money so you can pay me back. So when you pay me back, it's not a deduction because you wrote off that $10,000 when you bought that stuff for your business that you needed. If you wrote it off again when you paid me back, you'd be double dipping.
Makes sense. So what's the right, if you are expanding and spending all this money, is there a right way to do it as far as financing or, saving the cash or going about when it's time to expand?
Yeah, think about, too, that over the time it took you to get the presentation of your company profitable and it views profitable, you're reinvesting in your company. So you're making money. You've got to pay the percentage to the government, but you're putting the rest of it back in. So you're reinvesting in your company and you're building it, just like you would if you wanted what's a retirement account? You're just building something. You're building enough to have in retirement so you don't eat, romaine noodles every week. Because you got a little Social Security. You're building a retirement plan, build your company. Just the price to do that is the tax on it. But you asked me a little different question, though. Say that question again.
It's time to expand. Let's fast forward 5 years.
Okay.
Basically, because I've heard of businesses saving money rather than financing.
Right.
So is there, I guess, a wrong or a right way or pros and cons?
Not technically. Now, I will say that I would rather use somebody else's money at a lower price, so a small interest rate. If you build a $6 1,000 square foot building, it's going to cost you $800,000. Do you really want to wait till you can save up $800,000? Or do you want to save up $200,000, prove you got money in the bank, finance the other $600,000 at 3.5% interest, spread it out over time. That way you've got enough capital to keep making money to be able to pay the note off, so that at some point you're profitable enough that you want to sell your business, and then you can rent out that building and have mailbox money for the rest of your life. And that's a happy ending.
So to wrap this up, really your balance sheet is kind of your compass moving forward.
It is. And if you ever have a CFO tell you that the balance sheet isn't the most important thing, you need to fire them.
So really, but in order to look at the balance sheet, you need to know where you want to be in 3 to 5 years. Yeah,
you need to have those soul-searching conversations with yourself and possibly, depending on how big you are, your leadership team. What's your path? What's your goal? Going back when Stacey Wellborn was on the show talking about goal setting, this is part of that process. It's just on a bigger scope. It's not that I'm going to read 100 books this year. Do I want to finance a building? Do I want to open up 10 more stores? Do I want to double my sales force? Whatever it is, it doesn't matter. That's irrelevant, really. Nobody goes into business to lose money. All you entrepreneurs out there, you went into business to be successful. You wanted to be successful because you were good at something. All right. Now reach out to people who are good at this kind of stuff and know what they're talking about to help you plan to get there. Invest the money to get the right person, and it's not always me, to get the right person to guide you on how to get there. Because, I don't know how to change the oil in my car. I don't know how to do the editing of this podcast. I don't know how to do anything but what I do. So find that person so they can help you get to where you want to be. But think about it hard first, because to get where you want to go, if you do want to be successful, you are going to pay some tax. Hey, Katie, guess what? Intro, I said that I wanted to be in the highest tax bracket and don't want to be able to itemize. Mm-hmm. You want to know what that is?
What?
That means that nobody's sick or dying because I don't have high medical bills. It means that my house is paid for, and that means I'm making a whole lot of money if I'm in the highest tax bracket, and I'm at a happy place, because I'll give you $35 for a $100 bill every single day.
Cheers to
being in the highest tax bracket because you're making a little money. Y'all, thank you so much for listening and being here with us today. I'm Karen.
I'm Katie. Please be sure to subscribe to Cheers to Business podcast on iTunes or anywhere else that you get your podcast. Visit our Facebook and be sure to give us a like. And if you have any questions or topics you'd like us to discuss, shoot us an email from the website cheerstobusiness.com.